Getting a home loan. Wow. It can feel like you're staring up at this huge, complicated mountain. But what if we looked at it differently? What if we saw it as a journey with a clear map to follow? Well, that's exactly what we're going to do. We're going to break down the entire financing process, step by step, and turn that scary mountain into a totally manageable path to your new front door.
You know, if you've ever looked at a bunch of mortgage paperwork and just felt your head start to spin, you are definitely not alone. It really can feel like a maze, full of weird terms and endless steps. But don't worry, today our goal is to give you the compass and the map you need to navigate it all with confidence. So, let's start by laying the groundwork.
All right, every good journey starts with a little bit of prep work, right? So part one of our trip is all about shopping for your loan and, just laying that solid foundation. This is the part where you really put yourself in the driver's seat.
Okay, your first big stop is getting pre-approved. And this isn't some casual guess. No, it's a formal process where a lender takes a deep dive into your finances, your income, your assets, your credit score, the whole shebang. So you can think of it as the lender's official stamp of approval saying, hey, we've checked you out and we are willing to lend you up to this specific amount. That piece of paper gives you real buying power.
Honestly, getting pre-approved is a total power move. In a hot market, an offer from a buyer who's already pre-approved is way more appealing to a seller. Why? Because it shows you're serious and that the money is pretty much ready to go. It also helps smooth things out later on. But maybe the biggest win? It gives you a rock-solid, realistic budget, so you're only looking at homes you know you can actually afford.
All right, so you've got your pre-approval in hand and you're ready to start comparing lenders. But here's the thing, you've got to look beyond just that headline interest rate. The true cost of a loan is often hiding in the fees, and understanding those is the absolute key to finding the best deal.
First up, you're going to see something called an origination fee. Just think of this as the lender's service fee for doing all the admin work. The paperwork, the processing, everything it takes to get your loan set up. It's a one-time charge, and it's a pretty standard part of most mortgages.
Next, you might hear about something called discount points. Now, this is a pretty fascinating trade-off. It's totally optional, but you can choose to pay the lender more money up front at closing, and in return, they give you a lower interest rate for the entire life of the loan. It's kind of like you're prepaying for a long-term discount. And this really lays out that trade-off perfectly. Do you pay more now to save money on every single monthly payment for years and years? Or do you keep your upfront closing costs lower and just accept a slightly higher monthly bill? A little pro tip here is to figure out your break-even point. Basically, how long it'll take for your monthly savings to pay back the upfront cost of those points. If you plan to stay in the house longer than that, paying for points could be a really smart move.
So with all these different fees and points, comparing loans can feel like you're comparing apples and oranges. But thankfully, a federal law called the Truth in Lending Act, or TILA, comes to the rescue. It basically forces lenders to give you all the information you need to make a real apples-to-apples comparison.
And TILA gives us the single most important number for comparing loans, the APR. The annual percentage rate is not just your interest rate. It cleverly bundles the interest rate plus the origination fees, discount points, and other charges all into one single percentage. This number reflects the loan's true annual cost. So here's the key takeaway. Always compare the APR, not just the interest rate, to know which loan is actually cheaper.
Okay, so you shopped around, you've compared the APRs, and you have chosen your lender. Now we get to part 3, where it's time to make it official. This is where you formally apply for the loan on a specific house that you love. So at this stage, you're going to have to provide a ton of documentation about your finances. The lender really wants the complete picture: where you work, what you earn, what you've got saved up, and what you owe on things like student loans or credit cards. Here's a little tip. Try to gather digital copies of your pay stubs, bank statements, and tax returns ahead of time. It'll make this step go so much faster. Now, once your application is in, the lender is legally required to send you a standardized form called a loan estimate. This thing is your new best friend. It clearly lays out all the estimated costs, the interest rate, the monthly payment, and the total closing costs. It's designed to be super easy to read so you can avoid any nasty surprises down the road.
So, your application is in. Now it moves to this really critical, kind of behind-the-scenes stage called underwriting. This is where a real person, an underwriter, does the final homework on both you and the property you want to buy.
You can really boil down the entire complex underwriting process to this one simple question. From the lender's point of view, they're about to make a huge investment,
So they need to be totally confident that you, the borrower, and the house itself are a good, safe bet.
And to answer that good bet question, the underwriter goes through a super detailed checklist. They're going to verify everything on your application, go over your credit report with a fine-tooth comb, order an appraisal to make sure the house is actually worth what you're paying for it, and just make sure every single box is ticked. So, super important tip for you, during this phase, do not make any large purchases, open new credit cards, or change jobs. Anything like that can raise a huge red flag.
Once the underwriter gives that final green light, the clear to close, you've done it. You've made it to the final leg of the journey. Part 5 is closing. This is the finish line, where the ownership of the property officially transfers to you. You are so close.
Now, closing can feel like a flurry of activity, but it really boils down to these key steps. A title company makes sure the property's ownership history is clean. You'll do a final walkthrough of the house. You'll set up a special account for taxes and insurance, pay a little bit of what's called interim interest, and then finally, sign the ultimate document, the closing disclosure.
Let's quickly demystify that impound account, because sometimes it's called an escrow account and it can be confusing. All it is a savings account that's managed by your lender. A little piece of your monthly mortgage payment gets put into it, and then the lender uses that money to pay your property tax and insurance bills for you when they're due. It's actually a really convenient, stress-free system.
Okay, and what in the world is interim interest? This one can be a little tricky. Basically, your mortgage interest is paid in arrears, meaning your August 1st payment covers the interest for the month of July. So if you close on, say, June 15th, you have to pay the interest for the rest of June up front, at closing. That's because your first full mortgage payment isn't even due until August 1st. See? It's a little weird, but it makes sense once you break it down.
And now, the grand finale, signing the closing disclosure. This is it, the final, official breakdown of your loan, listing every single dollar and cent involved. By law, you have to get this document at least 3 business days before you sign, which gives you time to compare it to that loan estimate and ask about anything that looks different. So please, read it carefully.
And just like that, you sign the papers, you get the keys, and you are a homeowner. The journey to financing your home is complete. But as one journey ends, another one always begins. So the final question is, with this massive milestone unlocked, what's the next destination on your financial map?